Hello there. My name is Derek DeWinter, and I'm the co-founder and president of the DeWinter Group. We are a finance, technology, and HR search firm with lines of business and consulting, project and interim placement, contingent, and retained search. We have 3 offices in the Bay Area, Oakland, San Francisco, and Silicon Valley. And as of last week, have been in business for about 21 years, a little over now. Today we are going to be addressing probably the number one, certainly top 3 question that we get asked as recruiters. And that is, what is the best time to begin hiring for leadership, finance, and accounting positions at an early stage company? To help me dive into that question, I'm going to get the help and the great pleasure of speaking with my co-founder, friend and business partner, Mike Tomasello. I'll have him introduce himself shortly here, but to give some sort of point of reference, Mike and I collectively have about 50 years of experience in recruiting. I've placed hundreds and hundreds and probably into the thousands of people throughout the Bay Area. And this question that we're going to be addressing today has probably been asked of us several thousand times over the course of the past 25 years. And it's never exactly a one-size-fits-all response, but we'll dive into it. And Mike, maybe a little bit about yourself before we get going.
Sure. As you stated, we founded the firm about 21 years ago, and since then, we've been focused on recruitment in the finance and accounting arena. In recent years, probably the last 5 or almost 6 years, we've been doing a higher level retained search in the finance world, working with VPs of finance searches, working on CFO searches, with companies from Series A up to small public companies. So it's a good topic to discuss. It's something that we say we have expertise in because we've just done so many transactions, but I think it's something that's very helpful for a lot of companies out there to understand with respect to timing and when to bring in their lead finance person. So that's really it for that.
Yeah. All right. Well, so to the question at hand, what is the best time to begin hiring for leadership positions in finance if you're an early stage company, Series A to C, just to kind of frame it a little bit better?
Well, I mean, Series A to C is actually a pretty wide berth of clients you're talking about. You know, at Series A, you're just getting things started. You've built, an organization that probably has obviously your operations side as well as the people who are generating your revenue, your engineering side as well. You're doing a lot of, from an accounting and finance standpoint, you're at the very early stages, like you're paying your bills on time, you're getting things on bill.com, you're doing invoicing on QuickBooks probably. So really what you want, if you are going to hire at Series A, is someone who's kind of both a good accountant and someone who's a good FP&A person, forecasting person. So someone who kind of owns the model, owns the forecast, but can also block and tackle at the transaction level for accounting. Those tend to be titled head of finance, VP of finance type roles. You're far from hiring a CFO in the truest sense, but that's what you do kind of at a Series A. Around Series B, you start delineating between the accounting function and the finance function. You may bring in someone who's a very light kind of controller who's just doing your accounting and your reporting, and then there's someone who's doing your finance and owns the forecast. So that one role is now split into 2. And then Series C, when things start getting closer to, a run rate where you're getting close to 100 million and you're starting to look for more money at a higher level, obviously your Series C is going to be fairly large relative to your A and B. You're going to start looking for people who have a little more experience in financing, meaning going out and getting that money and having those relationships and being a little bit more detailed in the finance in the forecasting function, and also being a little bit more strategic. So that's when you're again, you still have a separation between your accounting and finance, but you are starting to look at maybe someone who can be a quote CFO, someone who has run a finance function top to bottom. You may have the controller roll up into this person. You may be adding some cash management responsibilities to this role. Not necessarily the person who could take you public, depending on how big you are. But, the one thing that we have seen change in the past few years is that a Series C company could be a $50 million company. It could be a $200 million company. It really depends on where they are in their life cycle. And that tends to dictate when they bring in a true CFO.
Yeah, I think the Bay Area is unique in that, our tech world is very, very different than a lot of the rest of the world, the rest of the country. There's a couple of other tech centers around around the nation, whether it's Denver or Southern California or Seattle or New York type of a thing. But we have a lot of traditional companies hire in a more traditional fashion, where you've got markers or milestones which you hit and then you do something. So it can often be a little bit more, I wouldn't say reactive, but like you hit a certain sales number, you hire more administration or finance. You hit a certain mile marker in kind of your product development, you're selling to a certain type of customer, you hit certain events and they trigger activities, including moving to other locations and having the complexities of the compliance issues that you might have if you were now have a production facility overseas. But the idiosyncrasies of our technology landscape is that a lot of the work that we do is with companies that have zero revenue. And so those traditional triggers for hiring somebody are more projection or growth oriented. And a lot of Series A to C companies, you've got new founders, maybe first-time founders, maybe second-time founders, and board members are VCs. You don't have a lot of independent board members, and those VCs are very growth-oriented individuals. They are forward-looking. They have provided you money to go spend it, to go get, revenue and market share and that type of a thing. So there's a lot of pre-revenue hiring that we see in the Valley that doesn't exist in most places.
Yeah, I think your point is valid, Derek, is that there is a certain X factor and variable that is the unknown when you're hiring here in the Valley. The speed of growth is so quick and so hard to predict that it's very difficult. Well, not very difficult, but more difficult than it is in other areas to decide when to bring in a leader for your finance organization. That's for sure.
I think one of the other things that you see in a lot of boards, particularly as you start getting more serious investment, is you get more serious people in the room every quarter. Sure. They want to know what you're doing, and that tends to impact the type of individual that you hire, particularly of late, where you get folks who are really good around a model, really good around development and massaging of a model, pivoting of a model, looking forward at currently unproven things that you've done as a business, because you may not even have customers, but you're being asked to forecast in a way that I don't know that it's hypothetical, but it requires you to put your critical thinking cap on as a finance person, because there are critical thinkers in the boardroom who are going to be asking us some more serious questions once they hand you $50 million or 100, or obviously much bigger numbers that we've seen over the course of the past 5 or 10 years. Mike, you touched upon this, or made a quick reference to it, is, has this first in finance hire changed in profile over the course of the past 5-10 years?
I mean, the profile has, in some ways, yes, and in some ways, no. I mean, I think people, when you're talking about early stage, are looking for people, like I mentioned before, who are very strong on the finance and forecasting side, and their ability to build out models and be strategic and, move with different assumptions that come into the model. They do have to have a little bit more of an accounting background to them. I mean, a lot of companies in the early stages may even outsource the accounting. We've seen that a bunch. And, when you bring it in-house, it needs to be justified. There needs to be enough there. I think when you start talking about things that are getting closer to a liquidation event, when you're in the Series D, Series E range, and you're looking to do an IPO, the skill set does change. I mean, you go from someone who's very strategic. There's always a strategic person in that role, but you go from someone who has a little bit more experience running a public company, which requires a different skill set related to Wall Street relationships, the ability to manage the expectations on the street, the ability to run an investor relations organization, have someone who's a little bit more of a sophisticated controller who's managing the SEC reporting requirements, the regulations there, the SOX reporting. I mean, it becomes a much bigger role with broader responsibilities that are actually less technical and kind of more relational and strategic. So you definitely see a difference there when you go public.
Yeah, as I think, back when dinosaurs roamed the earth and we were sending fax machines places, it feels like if there was a Series A or B company, they were hiring a controller. They were hiring an accounting person. They were not hiring somebody who was forward-looking and MBA oriented. There was a blip in the market back in, the dot-com boom, where a lot of investment bankers were drawn to the Valley and were being hired for some of those positions. But traditionally speaking, up until probably about 5, 6, 7 years ago, the first hire in was almost always a controller. And what I think what we see now is, there's a title of head of finance. Like, I never placed a head of finance before 2006 ever. But it's a title that kind of bridges both the finance and accounting function. And we're seeing a lot more VP of finance hires that have greater strength, significantly greater strength on the modeling side of things than they do the accounting side of things, which we never really saw that much of before. And my hunch is that this coincides with the heavy emphasis on the transition from enterprise software to SaaS, and the emphasis on finding folks that have knowledge of that model from a forecasting and budgeting perspective, as opposed to an accounting perspective. Because now some of the accounting issues aren't as complicated, perhaps.
Well, I don't know if I would, I may counter that a little bit, Derek, because as much as I do think the accounting function, especially with RevRec, has gotten more complicated over the years, and commissions and how people are accounting for that stuff, I think that what's interesting is technology has made it a lot easier to bypass the early accounting hire. I mean, you've got companies that I mentioned before. Obviously, you've got all these ERPs, but even early stage QuickBooks with, that's been around for a while, but now you've got bills.com. You've got all these things that kind of manage your transactions a little easier. So you may not need a full head count to grind away at invoicing, for example, or collections that you may have needed, 10 years ago. Technology's really made at least the transactional accounting side a little bit easier to manage. I do agree that the complexity of the models themselves have required someone to come in and understand the model, but I do think that that makes a little bit more sense to me from the technology standpoint, that the finance hire is a little bit more of a first hire now.
Yeah, certainly. I think there are a lot more outsourced accounting resources than there ever were before.
Right.
Fractional, relationships with companies that have CFOs and accounting folks, and even some really strong accounting firms that have an outsourced function in addition to their audit, review, and tax and compliance functions. So, we address this in general for kind of the Series A to Series C or D type of a thing, and when is the first time to hire, or when is the right time to hire that individual? What are the triggers for it? But let's pivot a little bit and talk a little bit about a later stage company. So you're a Series D or E, and you've raised whatever, and you've got some crazy unicorn valuation. What are some of the transitions that are maybe happening in those companies at a senior level? Maybe not CFO. Well, I guess CFO, but the kind of the VP levels underneath that individual. What are some of the trends that you have been seeing?
Yeah, I mean, the speed with which people are gaining valuation is as high as it's ever been. It's frankly a little crazy. So companies are having to really adjust quickly to, again, some event. It could be an IPO. The IPO market's it's pretty hot right now, but you throw the SPAC market in there, you have the requirements to report on the street, which brings in a whole different dimension and dynamic to the CFO role. So, the things that will always be required are, again, as I mentioned before, that ability to talk to the street, be able to manage an earnings call, set expectations with the street, have those relationships with the different banks who are, covering your stock, for example, but also be able to manage a team internally that is bigger and broader. In some cases, we've seen the advent of the CAO role, the chief accounting officer, become much bigger, which is what I like to call a controller on steroids, who is very strong on the compliance side, is very strong on the SEC side, signs the financials. So it's become a little bit more complex in the CFO's world when you go public. And that requires a skill set that, I think, and you can remark on this, Derek, is that it's interesting that we've seen more CFOs who have had a accounting background and maybe even a compliance background early in their careers, because they're a little more familiar with the demand for that now, and have moved on to be more finance oriented, business oriented, operations oriented, but still have that foundation in there. We also see people getting frankly hired right out of banks to be CFOs. And that again addresses the Wall Street experience, the ability to raise money, the ability to be good with risk management. So you can see them go in multiple directions, but they definitely have to have that experience with the compliance and the street experience.
Yeah, that's probably been one of the more prevalent positions that we've addressed of late is that VP controller and CAO. Or if you don't have a VP controller and you're looking to hire somebody and you're really late stage, do you hire a chief accounting officer? I mean, you're introducing another chief title into an organization that didn't have it before in the finance function, because you maybe got away with your VP of FP&A or VP controller not being an officer of the company, but now all of a sudden, you're hiring a chief of something, and that's different, like your CMO or CTO or CIO. And that, I know we've had some clients have some difficulty even internally justifying that type of chief title for something that ultimately is pretty important. And I made an analogy to somebody, actually I think it's a current client that we're working with, which is, if you're looking to replace your controller with somebody who's a chief accounting officer, you're basically looking to get a huge left tackle. This is your blind side, and I don't care what it costs. If you think you are going to have a liquidity event, a big IPO, and you've raised $300-400 million, you need an incredibly strong blindside person to protect you, which resonated with him as a football fan. But whatever analogy you want to make of it, like that has been something that we've been seeing an awful lot over the course of the past 4 or 5 years.
Yeah, and we've been seeing it earlier in the stage of the company. Usually we would do it.
Yeah, even pre-public.
Yeah, I mean, we would been doing a couple of, they're very late stage pre-public, but it's, let's get ready to, pull the trigger on our IPO. Let's get this person in. It does provide a lot of protection for the CFO, and they are recognizing it more than they have in the past. I think it's become pretty evident that you need somebody who's very strong compliance side and very strong on the system side to, to protect the CFO in certain areas that they may not be experts in. And it's an interesting role that has just gained a lot of steam, and the demand for it is huge. Whether it's a CAO or a VP controller, that's probably the highest demand in the market right now, relative to the supply, frankly.
Yeah. Well, I think, we want to try to wrap this up. And in conclusion, I would say all is lost. All is lost if you don't do this at the right time with the right person. I'm kidding. You can always make changes to any sort of decisions you make. You're not, your feet are not going to be in cement, loaded in the spot that you can't move from. But I think one of the difficulties is doing something that you've never done before. And a lot of founder-led companies who have not done this before are really great at engineering and really great at creating product and really great on the technology side of things. Finance is a bit of an anomaly, and not an anomaly. It's not known to them. They're unsure of it, and so I find that is often something that they are very reticent to hire for. And just because I love analogies, if you're thinking about, if you feel like you've hit a milestone where like we really need somebody, the chances are you've needed them for longer than that moment. It's like being thirsty. If you're thirsty, you're already dehydrated, and so the impact of not having somebody strong by your side in the finance and accounting function has already been felt by your organization. So once you've made that decision, it's great to gather as much information as possible and execute on it soon, because you really already needed that individual. So just a slight word of advice. Mike, any closing thoughts?
No, I don't have a bomb for this one. I usually have a great, drop a bomb in the conversation, but I don't this time. I think I will say I do believe boards and founders have become a little bit more savvy, because they do reach out to people to find out when the timing is right. Obviously, we have a lot of case studies to pull from to help these people out. It's certainly, it's certainly something that is, like you said, it's not something that they're very familiar with. I mean, these guys are engineers. These guys are salespeople. These guys know how to run an organization and make money, but the finance thing is not something they're super familiar with. And if you have questions, people should reach out. They should reach out to the VCs. They should have their, reach out to people who really can help them target the right time and opportunity to make the moves on this stuff.
Like us.
Like us.
Wink, wink.
Right. But it's good. I mean, we're a great resource, to be honest. So
yeah, no, we've done this a couple different times.
Right.
I guess the one thing that I might tell folks is, try to provide yourself some sort of flexibility in your hire. You can always make changes to what you do in terms of a hire, whether it's hiring above somebody or below somebody. And I know that's not a popular thing to think about, hiring above someone, but things change. We're in as dynamic a marketplace as there is in the world from a business perspective. And, you see companies with hockey sticks going up and to the right, and the person that's right today may not be right in 2 years. And I wouldn't try to overthink preparing for what your organization looks like in a couple of years. I really strongly encourage most founders or most hiring managers to think, what are my most immediate needs today? What are my most immediate needs in the next 12 months? What keeps me up at night? And that's the type of person that I want to try and go look for, as opposed to something in the future. So too far in the future, at least. Well, I want to thank Michael. Thank you for joining me today, bud.
Welcome.
And of course, Stampley for providing us a forum to have a conversation about this. Really appreciate being on these podcasts. And if you guys have any questions for us, those who are listening, you can reach out to Mike or I. Our information's on our DeWinter Group website. And we look forward to hearing from you. Have an awesome day.